Good morning, ladies and gentlemen. TGIF, yes, it is a Friday, although your internal calendar may say otherwise as a result of the holidays that we're just concluding. New Year's Day on Wednesday. Yesterday we opened up and the dollar did move to the upside in sharp trading. Today we're seeing a little bit of a move back to the downside in the US dollar. I'm going to talk about the three major currency pairs: euro versus US dollar, dollar versus yen, sterling versus US dollar in today's morning kickstart video. So let's get started. I'm going to start by looking at the daily chart of the euro versus US dollar. And in trading yesterday, we did indeed see the US dollar, the euro versus US dollar move to the downside. That move to the downside took the price down to 1.0223. That was just above the 1.00222 level, which was this low going back to November of 2022, not 2023, 2022. So the price did find support buyers against that corrective low back here before the market moved higher. Same thing happened in trading here today or yesterday with the price moving down to that level, finding some support buyers and moving back to the upside. We are trading near the highs for the day. You can see that off of the hourly chart. And if I go to that chart, that move to the upside is now approaching the 38.2% retracement of the move down from this high from from earlier this week, I should say. Again, the calendar is kind of messed up, but from the 30th, and we've since then we've seen the price have moved down, goes to Fraser 3 separate days to the downside. We've seen the rebound to the upside here in the euro versus US dollar, moving its way back toward the 38.2% retracement of this move to the downside from the week's high to the week's low right here. That level comes in at 1.03128, and we need to get above that level to show that the buyers mean at least some business, if you will, after the declines in trading this week. Get above that level. It would also take the price above this swing low right here, where the market bounced higher and in the process moved up to retest this low swing area through here. All these different lows coming into play, including lows from earlier this week. That high price that we saw off the rebound yesterday came right up to the low of this swing area. Maybe I'll put this level in yellow here to make it seem more important, which it is. Swing low, swing low, swing low, forming the floor. Swing low, fell below that low, came up to the low of the swing area and rotates to the downside. So getting above the 38.2, getting above the 1.0332 to 1.0343 level is important for any sort of rebound to the upside. Absent that, and this move to the upside looks just like a plain vanilla corrective move, and we'd expect further a move to the downside. I have to say the price comes to 38.2% retrace and stalls right there. So be aware of that level, 1.03128. Move below, stay below that level, keeps us in more control. Move above, and we can make a test run toward the 50%, toward the swing area up here between 1.0332 and 1.0343. Let's take a look at the dollar versus yen next. And again, we'll start by taking a look at the daily chart. And earlier this week, we moved back into this swing area. Now, this is why this is a daily chart, and between 157.66 and 158.86, so about 120 pips there. But the dollar versus yen moves have been very exaggerated of late, and that swing area is defined by a number of different swing highs through here, and then we found some lows through here, forcing the price to the extreme of 2024. That extreme took the price up to 161.94. Then we started to move to the downside, moved all the way down to a low near 139.57 before starting its rebound to the upside. Over the last few weeks, we've seen the price move back into this swing area, but including yesterday's trade, by the way. But they rotated back to the downside. The low of that swing area comes in at 157.66. Let's go to the hourly chart and see what that looks like. 157.66 is this level right here, and you can see how the price yesterday moved above it. In the Asian session, rotated to downside, moved above it. In the U.S. session, moved back to the downside. This consolidation up here has the price or the moving average is catching up with the price. I'm going to put a red box around this area where the price moved higher, lower, higher, lower, higher, lower, higher, lower, where the range is getting more narrow, but we are seeing higher highs right through here. But in trading here today, we are back below the 100 and 200 hour moving averages. That's this blue and green lines in the chart right through here, and staying below those levels right here keeps the bias more tilted to the downside in the short term only. We do have work to do on the downside, including getting outside of this box down at 155.88. But if the price can stay below the 100 and 200 hour moving average in the short term here, that would keep the bias more to the downside, and we'll look for lower levels in the dollar versus yen. If we move back above it, then we'll look back toward that 157.66. That's the start off the swing area on the daily chart. And if we get and stay above that level, get above the 158.08 level, which was the swing high from the month of December, then it opens the door for further upside with the 158.66 level, I think that was, off the daily chart, 158.86 level on the daily chart as the next key target on the top side. So be aware of that. Finally, let's take a look at the sterling versus US dollar. In this case, let's start at the daily chart. In the daily chart yesterday, we traded sharply lower and away from this broken trend line. Admittedly, in trading over the last few weeks, the price has broken below that trend line, had a number of different swing lows along it. One here, one here, one here. Another one here, and we came through it, and but could not sustain the momentum, came back up. What is key here, I think, is that in trading this week, is that the price high came up to the 1.26147 level. That's the range since the 2023 low. This is a 2023 low to the 2024 high. 50% comes in at 1.26147. We stayed below that level, rotated back below and below the old trend line right here, and moved away from it. We are now moving up toward the 61.8% retracement at 1.2423 level. If we can stay below that level, that would give the sellers more confidence to push to the downside toward this low that we saw in the what was that, the month of February, or month of March or April, if I think it's April, 122.95, right around the 123 level. Get below that 123 level, opens the door for further downside. Let's look at the hourly chart off of this pair, and if we take a look at the range of this week, this is a high price that came up toward that resistance level. That 50 resistance level off the daily chart. It also corresponds with a number of different swing lows and swing highs through here between 1.2596 and 1.26147. The inability to get above that level opened the door for further downside, and we've seen in trading yesterday the price hold below the 100 and 200 hour moving averages right through here and force its way to the downside. The 38.2% retracement of this move to the downside comes in at 1.24487, and getting above that level is the minimum requirement that we're going to need to do to show that the buyers are taking back some control in the short term. That's the minimum, folks. With the price currently trading at 1.24069, we're still a few 40 or so pips away from that level. So be aware there's room to roam to the upside if the market so desires, but the sellers still remain in control below these levels. So there you have it. A look at the three major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune to your trading. Bye-bye now.